Imagine this. The people who make America's financial rules are suddenly selling their own investments. Quietly, massively, and all at once. What's driving this move? Are they predicting a stock market crash? Or are they just adjusting before big economic shifts? Congress members are legally required to report their trades, and this year, those reports are catching everyone's attention. In this video, we'll break down what's really happening behind the scenes, why it matters, and what it means for your money. Every few months, Congress members are required to file what's called a periodic transaction report. These public disclosures show what they buy and sell, and recently, the numbers are shocking. Multiple lawmakers have reported selling large positions across major sectors: technology, energy, defense, and even healthcare. Some of these trades are worth hundreds of thousands of dollars, and many happened just weeks before important policy announcements. Now, selling stocks isn't illegal, but the timing, that's what's making people talk. When lawmakers sell right before major policy shifts, it creates suspicion. Do they know something the public doesn't? The Stock Act, passed in 2012, was designed to prevent insider trading among Congress members. But it doesn't ban them from trading. It only requires disclosure, often weeks after the trade. So technically, by the time we find out, it's already too late. When the people in charge of regulation start to act like investors, it creates a conflict between power and profit. Think about it. If you were helping shape policy for the tech industry and you suddenly sold your tech stocks, what message would that send? Even if it's all legal, perception matters. Markets are emotional. They react to fear, confidence, and uncertainty. And when Congress gets cautious, investors start asking, should we be worried too? According to QuiverQuant, over $4.5 million worth of trades were reported from members of Congress in the last quarter alone. Tech companies like Nvidia, Apple, and Meta are among the most sold stocks, especially by committees tied to tech regulation. Defense and energy stocks also saw major sell-offs after global policy announcements. The trend isn't random, it's concentrated and strategic. If Congress is selling, it doesn't always mean you should too. But it might mean market volatility is on the horizon. Think of these trades as signals, not secrets. Following official disclosures gives you insight into how confident or cautious policymakers are about the economy. When they start to exit, it's often a sign they expect turbulence ahead. Lawmakers argue their trades are transparent. After all, the reports are public. But the real question isn't about legality, it's about ethics. Should people with inside access to government decisions be allowed to invest in markets that their policies affect? A bipartisan group has proposed banning individual stock trading for Congress altogether, but it's still under debate. Until then, the pattern continues, and investors are watching closely. So, what can you do as an investor or learner? Simple. Track, learn, and adapt. Follow public resources like QuiverQuant or Capital Trades. They show trades in real time. Don't panic. Understand why they're selling. Maybe it's taxes, maybe it's risk, or maybe it's just timing before elections. The smart move is to stay informed and move with data, not fear. So, should you be worried? Maybe not. But you should be alert. Because when Congress moves money, markets listen, stay informed, stay prepared. And remember, money always tells a story before anyone else does. I'm at Cashflow Secrets 5463, and this is how you follow the smart money. Subscribe for more deep dives into financial truth and market psychology.